A lot of people come to me and ask the question, should I pay my home off? Should I make double payments on the home? Should I take the inheritance money that I received? Or should I sell the money that I have in the stock market because it's going down and pay the home down, or maybe pay the home off? And I want to talk about some of the pros and cons to doing that. There is a great emotional value in being debt-free. I've been free of debt, and I've had millions upon millions in debt, and I can tell you that it's far easier emotionally to be debt-free. Now, as we look at making double payments on a home, say you have an extra $1,000 a month to make a payment on a home, and you want to take all that money and put it down on the home. And 4 years from now, you've been able to get the home value down, not the value, but hopefully the home value has gone up to $300,000, and the amount you owe on it is $150,000. As we look at that equity, that's fantastic, but let's say you lose your job. We're in a bad economy, the jobs market is poor, and you have to now sell your home. You see, the bank's not going to loan you money to be able to pull the equity back out of the home because you don't have a job. And so we're not liquid because we've been taking a lot of that extra money and just paying the home down. Or maybe a lot of people will put money into IRAs and 401ks and pay the home down, and there's still no money that's liquid to pay the home to continue to make the house payments. Now, from a creditor or bankruptcy standpoint, it's good because in most states you have the ability to protect the equity that's in your home, at least some of it, from creditors and from bankruptcy. So from that standpoint, it's good, but you may very well be fire selling it in a poor housing market if you haven't put some money away on the side from liquidity. So the right answer, in my opinion, for most people is to have plenty of money built up in liquid reserves, and then look at your risk and look at the interest rate on your home versus what it could be, and determine where am I going to most likely make more money over the long term, because this can be a big key to creating wealth. Most Americans, their single biggest asset in terms of value is their home. So as we look at what your interest rate is and whether or not we should refinance and when we should pay the home off, we have to consider what mortgage we would get. And if we were doing it, there's not a big disparity between a 15 and a 30-year mortgage. You can see 2.8 to 3.75, not almost just 1% there between a 5-year and a 30-year. Generally, 5 years ago and probably 5 years from now, there will be a bigger disparity. So right now is generally, for most Americans, a great time to refinance. But in terms of dollar amounts, even in this lower disparity environment, there is still a big thousands of dollars per year in interest on a $300,000 note between a 2.8 and a 3.75 loan. And if we look at 20 years plus opportunity cost, that can add up to a lot of money. Now, let's determine who should have a 5-year, who should have a 15-year, who might want to have a 30-year mortgage. And the question is related to if I should pay the home off early. Because if you are going to pay the home off early, you don't want to have a 30-year. So if you're highly convicted that you're going to pay the home off in 15 years or 18 years, you probably want to have a 15-year mortgage, because it's going to save you, a couple $1,000 bucks, probably $15,000 a year, depending on your mortgage amount. You have to do the math. You have to look at the refinance costs. But if your time frame to pay the home off is 15 years, why would you pay 3.75 when you could be paying 3.3 is for the most people the answer. And I've talked to people who want to pay the home off in 3 years or 5 years or even 6 years. And I would look at, in that case, looking at a 5-year arm, even for a 6-year. Because for 5 of those 6 years, your interest rate's probably going to be lower. There's a chance it won't go up. And if it does go up for 1 year, you probably are going to be in a position, if it got up and went out of control, to just pay it off in one lump sum in that last final year. And of course, there's not that much that's owed. If you're on a 6-year time period to pay it off, by the end of the 5th year, you probably only owe $40,000 on it. And if the interest rate did go up, most of these are capped. So you would only have, it will only go up by maybe 2%. So look at when you plan on paying the home off, what the interest rates are, and use a calculator to figure out what is the cost difference. And in some cases, banks have specials and refinance discounts and so forth to go with one over another. So the closing costs might be lower in one over another as well. So as you consider, should I pay my home off and when should I pay my home off, have a plan that is articulated, it's laid out, that it's abided by, that it's revisited semi-annually to make sure that it's still the right plan, and go with that thing that you're most highly confident will come out to play.